Hey, what's up guys? John here. 62% of all property mortgages are backed by Fannie and Freddie. 62%. Well, the building collapse that occurred in Miami recently, about 6 or 7 months ago, where roughly 100 people died, that is going to now change your ability to purchase a condo. And this is a very big deal, especially because generally condos are much more attainable. They're less expensive than a single family home. So it's very easy for one to go from a rental apartment to purchasing a condo rather than going from a rental apartment to purchasing a home. Now, what we are seeing right now with this new change that just came out is pretty concerning. And in this video, I'm going to walk you through exactly what's going on as well as what this is going to do to the condo market and potentially the overall real estate market. Please hit that like button. If you hit the like button, YouTube's going to share this content. And the more people that see it, the more people that become awake and aware as to what's really happening in the real estate market that no one else is talking about. So please hit that like button. Let's begin. So could Fannie Mae and Freddie Mac loan guidelines for condos have a harmful ripple effect on the housing market? In the wake of the tragic collapse of a condo building in Surfside, Florida that killed nearly 100, just about every aspect of the condominium industry has been put under a microscope, ranging from new legislation around the condo rectification process to be more stringent requirements around inspections. Another aspect of condo ownership is undergoing challenges, issuing loans to condos that could face deferred maintenance and repair issues. Fannie and Freddie, government-sponsored enterprises that buy and guarantee mortgages through lenders in the second mortgage market, have recently changed lending guidelines for condos as a direct response to the Surfside collapse. Fannie Mae's new guidelines, which went into effect at the start of 2022, says it will no longer purchase loans secured by units in condominiums that have significant deferred maintenance or have received a directive from the regulatory authority or inspection agency to make repairs because of unsafe conditions. Freddie Mac's new guidelines, which go into effect February 28th, will also deem condos that need significant critical repairs as ineligible for the program. The new directives were issued as temporary guidance. Our condo and co-op project standards policies are designed to support the ongoing viability of condo and co-op projects, Fannie wrote in a letter this fall. In the wake of the tragic collapse in Surfside, Florida, residential buildings with aging infrastructure and significant deferred maintenance are a growing concern across the nation. This concern is expected to increase over the next decade as the majority of residential condos and co-op buildings were built more than 20 years ago. Lenders and other industry stakeholders have asked for clear guidance on how to manage emerging risk to residential projects. About 60% of condos in the state of Florida alone, or more than 912,000 units, are 30 years or older. A real estate attorney in Michelin at McMillan Metro PC in Potomac, Maryland, said she expects the new guidance will have ripple effect on the larger housing market. I think a lot of private lenders often model their lending guidelines based on what Fannie Mae does. Even private lenders will start implementing similar requirements. She said she also thinks it's going to be a lot more difficult for condo owners to sell units with new requirements and for potential condo buyers to qualify for loans through Fannie and Freddie or even the private market. That'll likely mean disproportionate impact on first-time buyers with more modest incomes, as condos are, on the whole, more affordable for buyers than traditional single-family homes. The median existing home sale price nationally was $297,800 in January compared to $357,000 for an existing single-family home, according to the National Association of Realtors. A new lender questionnaire around a condo building's condition is seen by industry groups as a key hurdle for those seeking to buy and sell condos. Qualify for a Fannie or Freddie loan requirements under the new guidance, condo board members now have to fill out questionnaires that ask questions such as whether the association or cooperative corporation is aware of any deficiencies related to safety, soundness, structural integrity, and habitability of a project's building. That's a tough question for a representative of a condo building to accurately answer. The CAI is a Falls Church, Virginia-based organization that represents association boards, community managers, association management firms, and other professionals that work with associations like condo boards. The question is not a yes or no answer in most cases by a board member or manager, she continued. They're not a building inspector or a structural engineer. You can't see some of these issues. The folks are not qualified to answer the questions. The CAI, in a February 17th letter to Sandra Thompson, acting director of the Federal Housing Finance Agency, is pushing for a 1-year delay on the guidelines. One of the primary concerns the CAI has with the new guidance is around the yes-no nature of questions around the building soundness or safety, Brahman said. And if the new questionnaire isn't fully filled out, a condo won't be eligible for a loan under the Fannie and Freddie standards, she continued. The NAR in December also called for a delay in implementation and better information for homeowners association around the new guidance. In a response to the NAR leadership in February 1st letter, Thompson said the FHFA expects both enterprises to continue implementing their standard policies to address the risk to increase safety of the borrowers. The recent changes announced by Fannie Mae make condominium projects ineligible, where there is significant deferred maintenance such as postponement of normal maintenance that creates safety hazards that endanger life, Thompson wrote. The changes also require adequate financial reserves protecting both the owner and the property. Brahman said already she's heard of lenders denying mortgages for seemingly sound buildings and creditworthy buyers because the question is not answered. She said if that keeps happening, it could make condos as housing options for first-time and seniors more difficult. Who's going to buy them? Potentially real estate investment trust companies that purchase lots of homes with cash offers, then rent them out. CAI leaders said in the letter to the FHFA, it supports the intent of new requirements and understands the need for government-sponsored enterprises to assess and mitigate risk associated in their portfolios. CAI respectfully recommends a delay in implementation to support this outcome by reducing uncertainty, allowing associations, their managing agents, and service providers to produce documentation materials more efficiently and accounting for state and local governments' enactment of appropriate condominium and cooperative project safety and financial solvency standards, the association wrote. Brahman said conversations between CAI and FHFA have been ongoing both before and since the new guidance was issued. The FHFA did not respond to the business journals by deadline on whether changes to the questionnaire and new guidance on condos are planned. Lee said she thinks it's likely both enterprises will revisit the guidelines because of the unintended consequences they could have on the overall housing market. She said both entities are charged with helping provide affordable housing in the U.S. Now imagine you were trying to sell a condominium and you were to sell that unit and the only available buyers are a real estate investment trust or a private equity firm that can pay all cash or a large corporation. What are they going to do? They're going to expect a premium to purchase that property simply because there's not going to be any other competition out there. Banks aren't going to lend on these properties. Now, this could pose a very, very big threat to a condominium seller and a very big problem for new owners that want to buy their first property. They're going to have to go from an apartment to potentially purchasing a single family home, which if we look at home prices throughout America right now, single family home prices are through the roof. This is going to have a very big impact on the housing market, I would predict. But I'm very curious as to what you think. What do you think about this? So over half of the housing stock would be supported with Fannie and Freddie. And if they're starting here in the condo market, is this going to continue to get pushed out? Drop your comments below. Let's talk about it. Subscribe here. Consider subbing on my personal channel, my second YouTube channel, and my TikTok where I post 4 to 5 times a day. Content I don't post here. I'm going to leave the links to all 3 channels down below. Hit that like button, and I'll catch you guys later.